So, the Australian dollar, it's been taking a bit of a beating lately, right? But what if a tactical turnaround is just around the corner? We're going to dive into some expert analysis to figure out where it might be headed next.
And that's the big question, isn't it? Is the Aussie dollar actually poised for a rebound? There's some pretty significant global signals that suggest a tactical comeback could be in the cards. So let's explore if this is a real turnaround story in the making.
Okay, so we're going to break this down into 4 parts. First, we'll look at the big picture, the global chessboard. Then, we'll check out Australia's own economic report card. After that, we'll weigh the market forces. And finally, wrap it all up with the tactical outlook. All right, first up, the global chessboard. You see, to really get a handle on the Aussie dollar, you have to start with the 2 giants on the world stage that are really pulling the strings, the United States and, of course, China. Okay, check this out, because this is where it gets really interesting. We're seeing this tale of 2 central banks playing out. Over in the US, the Fed is starting to signal that they might cut interest rates, which tends to soften the US dollar. At the same time, down under, Australia's Reserve Bank is actually slowing down its own pace of cuts. This difference, this divergence, is absolutely crucial. A weaker US dollar basically gives the Aussie a natural tailwind. And then you've got China. As Australia's #1 trading partner, its economic health is, well, it's everything. And this quote from Australia's own central bank says it all. They see China as resilient thanks to government support policies. This isn't just a small detail. It's a foundational piece of the puzzle, a vote of confidence that supports the entire outlook for the Aussie dollar. Okay, so we've looked at the global picture. Now let's bring our focus in a little closer to home and take a look at Australia's own economic report card. Let's do a quick health check on what's driving the currency from the inside. So if we're looking at Australia's key vitals, the picture is actually pretty solid. You've got core inflation, which is getting really close to its target, unemployment remains healthy, and the PMI indicator shows the economy is still expanding. All in all, a pretty positive report card. Now I want you to focus on this number for a second. 2.7%. That's Australia's core inflation, a multi-year low. So why is this one number so important? Well, because it gives the Reserve Bank incredible flexibility. They don't have to raise rates to fight inflation, but they also don't need to cut aggressively to support the economy. It's that perfect Goldilocks scenario, Not too hot, not too cold. Okay, but it's not all smooth sailing. We have to look at potential headwinds too. And one of those is the recent shift to a small current account deficit. Now, at 4.9 billion Australian dollars, it's not a major red flag or anything. But what it does mean is that the currency has a slightly smaller cushion than it did before. It's just something to keep on the radar. All right, for our third section, let's weigh the market forces. So beyond the economic data, let's get into the nitty-gritty of what's actually tipping the scales. We're talking commodity prices and, maybe more importantly, what traders are doing with their money. Australia is a commodity powerhouse, so these prices are critical. Key exports like iron ore and natural gas are holding at stable, supportive levels. Now, they aren't surging, but they aren't collapsing either. Think of it as a steady floor under the Aussie dollar. And this right here might be the most compelling piece of the puzzle. The big market players, the speculators, are overwhelmingly betting against the Australian dollar. We call this a massive net short position. This is a really, really crowded trade. It's like almost everyone is crammed onto one side of the boat. And when you have a situation like that, it creates this incredibly tense, coiled spring effect. If any good news hits, like that potential US rate cut we talked about, all those traders could be forced to buy back their positions in a panic. That mad dash for the exits is known as a short squeeze, and it can cause a sharp, rapid price spike. Okay, so let's get to the bottom line. Our final section, the tactical outlook. It's time to bring all of this analysis together and translate it into a practical strategy for the coming weeks. All that analysis basically boils down to this clear 4-step playbook. The core strategy is to buy on dips, using temporary weakness as a buying opportunity. A key technical level to watch for support is around 0.635. The positive catalysts would be continued stable inflation and good news out of China. And of course, the risks to watch are a surprise inflation flare-up or a major global shock that sends investors running for safety. So, to wrap it all up, the case for a stronger Aussie dollar really rests on 4 key pillars. The biggest driver, at 40%, is the potential for a softer US dollar. This is followed by stable domestic growth, that extreme short positioning we just talked about, and China's continued resilience. And all of this leaves us with one final provocative thought to chew on. When you have so many people in the market betting one way, while the fundamentals seem to be pointing the other,
Could buying the Australian dollar right now be the ultimate contrarian play? It's a compelling question to think about. Thanks for joining me.